Hi everyone, welcome to another honeystocks.com analysis. This one's going to be going out for the month of November. Now, before I, of course, do the usual and switch over to my screen share and walk you through a lot of the charts that are on my radar, a lot of the broader market analysis that I know that many of you like, a couple of things to get out there off the bat before I get any nasty emails or silly comments is I'm not a day trader. The work and the time horizon that I work with is generally weeks to months. I couldn't think of anything worse than day trading and slinging weekly options and so forth. So if you're someone that has a logical view of the market, your time horizon's a little bit further out, then you'll probably get some value from it. But if you're a short-term day trader, please, you're probably better just watching something else. Want to take the opportunity to thank everybody as well, just for a lot of the comments after my analysis 3 weeks ago. I did an update last week as well. If you missed those, I'm going to link it at the end of this video. But hopefully, as always, you get some insight and you enjoy the work that I put into the charts. And if you do, please do give the video a like. It's the cost of entry. It's completely free content. The only thing I ask is that you hit the like button just to help it get out there on the YouTube algorithms. But let's dive into the charts. Let's see what the market's telling us, and yeah, let's go. Now, before I get into the charts, as always, please pause the video, make sure you're comfortable with that before watching any further. Basically just says that there's not any investment advice and to do all your own due diligence. To give myself a little bit of credibility, I'm working my way towards my CMT. Technical analysis is something that I'm very widely known for in professional circles, and hopefully you get some value. This is the analysis that was put out to social media. Again, another social media freebie 3 weeks ago. That's how the stocks have performed in the last 3 weeks. A couple of my recent calls, I fully understand that with the work that I do, it's very much a case of what have you done for me lately. Coming into September, I was advocating getting defensive and to be very, very cautious. Ultimately, it played out. I called the bottom in tech, the Nasdaq. As you can see, no magical hindsight indicators are used with my work. I made a super bullish call on Bitcoin. And for those of you that have followed me a while, you'll know that I got defensive ahead of the crash. Again, there's no hindsight indicators. I've put this out to social media, the analysis that was provided to our clients and members in real time 18 months ago. So, like I said, if you get some value from it, again, give the video a like and a thumbs up. It would be much appreciated. Now, going back to seasonality, obviously September was quite challenging. We got through September. October has been utterly incredible so far. The bullish thesis that I've had coming into the fourth quarter looks to be playing out, and we're coming into November and December, which are traditionally pretty heavy performers. I think most of us are looking forward to some kind of Santa Claus rally, and it'll be very, very interesting to see how things play out over the coming weeks. But nothing really changes for me. I'm still bullish on the market. I know there's some of you out there that like to talk about money printing and the Fed and it's a scam, and I prefer to just keep an eye on the charts because the charts tell me everything I need to know. But this is one of the charts that I've actually communicated to our clients this week. Now, with consumer discretionary relative to staples, now, again, a few weeks ago, I got a lot of heat because I was telling everybody that when the market was tanking, that this ratio was resolving higher. So it was telling me that the market was a buy opportunity. Now, that's played out perfectly. But what I do want to draw your attention to is with this ratio, when we get extreme readings with RSI, and this is a very important chart for my work, it often helps me to get defensive ahead of corrections, crashes, whatever you want to call them. And with the RSI, we're up at 75 at the moment. Now, if this ratio gets up to around the 80 level, I would be communicating to my clients that it's time to start to maybe lift profits off the table, start thinking about defensive action. We're not there yet. The best case scenario for me is this just continues to chop about sideways for the next couple of months and doesn't reach these extreme levels that, as the chart can demonstrate, is a bit of a problem. It gives us these market sell-offs. So for me, I'm quite happy with the broader market. I think the Nasdaq Composite, yes, it's had an incredible rally off its lows. It is looking like it's breaking out to all-time highs. Again, one of the things that I like to look for, when we're looking for corrections, is we look for failed breakouts. That's really the first warning signal for me. So yes, the market does look like it's breaking out to new all-time highs at the moment, but if we start to see a rapid decline from these levels, that would be a signal again to me to maybe start thinking about defensive action. So technology has been range bound for the last few months, and of course it looks like it's breaking out. We've got another big earnings week with the S&P 500, again new all-time highs. So the message really that I've been communicating to our clients and members over the last 6 weeks is really just not focus too much on the broader market, and really just bring it down and focus on the individual stocks that you own and the charts for the stocks that you own. I'm obviously very, very technical in my work. I do have an appreciation now for the fundamental side of the game. It's something that I think if you were to have spoken to me 3-4 years ago, I would have been fully technical in my approach and completely disregarded all fundamentals. But I actually do have a bit of an appreciation for fundamentals, and I think my own personal style is probably more of a technical investor. That's how I would probably class myself. Like I said before, I'm not looking to day trade or anything like that. My time horizon is generally weeks to months, and that works and fits for me. We've got the Russell 2000, again it's chopping about in a sideways range at the moment, doing a whole lot of nothing. But what you have to understand with a lot of these small caps is a lot of the small caps have put in bottoms, and they are starting to move higher. So there's a lot of analysts out there that are panning the small caps, and yes, I understand that they've not broken out and they've not moved to new highs, but again it comes down to the individual charts for the stocks. A lot of the names there are doing just fine, so just need to find them. That would be the message. Yes, the Russell 2000 is in a sideways range, but there are stocks that are aligned with the Russell 2000, the growth and value areas of the Russell 2000, and they're doing very, very well. And I've been on top of quite a few of those charts over the last couple of months. We've got financials breaking out to all-time highs as well. That's not a bearish characteristic of the market. If financials are doing well in a higher interest rate environment, you would expect the boring old banks to do pretty well, and they have been doing very, very well over the last couple of months. Again, don't get too fixated on just growth tech, because there's a lot of areas that I think many of you watching just won't know to look, because you're so fixated on these growth tech names. And if I put out a couple of charts here over the last couple of weeks, the solar names have been absolutely ripping higher. And again, I've been providing solar names, I've been providing lithium names to our clients, and these names have moved 15-20% in the last 7 days. So don't neglect these areas of the market. I understand many of you just won't have the time to scan the whole market, perhaps like professionals do, but there are plenty of areas that are performing incredibly, incredibly well. Now that leads me on to some individual names that I think can be added to your watch lists. I think I've got around 10 names or so here. So we've got Google on the back of positive earnings. Of course, it's for me, it's a Fibonacci chart, and it looks like it's breaking out above its next Fibonacci level after a couple of months there of consolidation. So again, I've got a very lofty target there. We know how it works. They move from one Fibonacci to the next. So I have a target there of around 4,500. We've got a massive base breakout in Salesforce. Again, I covered this one a few weeks ago, and I covered it last week as well. Big 12-month base. Very, very difficult to be bearish on Salesforce at this point. For disclosure, I own plenty of AMD. I held my position through earnings, and it looks pretty decent. The earnings were okay, and for me, I'm just utilizing technical analysis to keep me in the trade for longer, and ultimately I'll see how far this one wants to run. If it pulls back heavily next week, no problem. Thanks very much, Mr. AMD. I bought you 100, so I'll get out, and no chances taken. I'll go and allocate to something else, because I'm very much about dating in this game. I never get married to any stocks. We've got PayPal. Again, the iPay ETF, which encompasses the Visas, the MasterCards, the PayPals. A lot of these names have been beaten down over the last few months, and as the chart can demonstrate with PayPal, it's been in a sideways range for quite a long time. With sideways ranges, it's very, very, very straightforward. You buy at the bottom and you sell at the top. There's no magical science. It's basic support and resistance, and if it does break down below these levels, I'd very much be looking for a failed breakdown and then a rip higher. So it's not a stock I would look to short, but I think one of the reasons why the payment processing companies have been hit quite hard over the last couple of months is really probably coming down to, I guess, the hype around the Bitcoin Lightning Network and the low cost transaction fees for sending money from A to B. I think that's going to be massive, and it does look like a lot of the payment processing companies are being disrupted, and of course I look forward to seeing how that all plays out. Facebook, now obviously we've got on the chart, I don't like Mark Zuckerberg in any way, shape or form. I think he's a bit of a, as the chart shows, a robotic alien-like creature, but I'm not going to hold that against the company. Facebook is a fantastic company. It's pulled back to its 200-day simple moving average, and what I look for when stocks are potentially bottoming is I look for a bullish divergence, which is lower lows in price and lower highs with RSI, and for me it looks to be a characteristic of a bottom. But again, the message that I've had with my clients over the last 7 days with Facebook is if we start to undercut these lows, then again that's a problem, and it tells me my thesis is incorrect. So yeah, I think Facebook probably makes a lot of sense for many of you watching. Now, Antero Resources, again, this is probably not a company that you'll have heard much of. It's a $6 billion market cap. It is a massive company. I've been on top of this one since this breakout down at $5. I've been covering this one for our clients since December last year. Again, no magical hindsight indicators, and it just puts in base breakout after base breakout, and I'm looking at a new entry, which will be a compound opportunity for many of our clients and members above 21.50. FCX, again, disclosure, I own plenty of FCX. For me, the chart has slightly changed over the last week or so. It's been chopping about sideways. I'm just looking for a breakout above $40 there, and I potentially look to add to my position. This is an alert that we sent out to our clients and members a few weeks ago, and this was the communication that's been provided this weekend to them. And we also have Apple. Now, obviously, Apple, lots of, I guess, chatter about the earnings and so forth. I don't want to get too much into it. I think something that I fully accept with Apple is that it is susceptible to these big drawdowns, but ultimately it's now the second biggest company on the planet. I think Microsoft overtook it yesterday, so excuse me. But if we purely observe the technicals, going back to similar with the Facebook chart, when you pull back to these key levels, the 100-day and the 200-day simple moving average, these tend to be decent buy points for the stock. So I think Apple, we've got earnings out the way. It did put in a little bit of a rally as the day wore on Friday. The indices obviously closed at a new all-time high, and yeah, I think the rally in Apple towards the end of the day probably contributed to that. I've had a lot of messages on NVDA over the last 7 days. Again, most of you know I made a bullish call on this one a few weeks ago, and it's absolutely ripped higher, and ultimately I've got a target there of around 277. I think if it does pull back, I think pullbacks and uptrends offer opportunity. The RSI does look like it's a little bit heavy there, but we do have very low volatility. So yeah, I think NVIDIA is a stock I like very, very much, and of course that's probably why I own it. So yeah, I think if you have got some value from the analysis, please do just hit the like button. Like I said before, it really helps to get my work out there, helps with the YouTube algorithms, and it would be very much appreciated. If you're somebody that perhaps struggles a little bit with the markets, with where to allocate, etc., feel free to go and check out our website at honeystocks.com. There's a link in the description. There's also a link in the description for discount to technical analysis software for TrendSpider, which is incredibly good software. But every week we provide our premium work to our investors and traders all over the world. We provide trade ideas. I'll show you what that looks like in just a second. We provide a midweek bite-sized halftime analysis. I provide access to a trading community, again, of investors and traders from all over the world. I provide charting support, and for those of you that are maybe new to technical analysis and would like to learn a bit more, within our memberships we also include full access to our complete technical analysis program. We don't hold anything back, it's all included. And again, feel free to check out our website, front and centre. Obviously it was a big deal at the time, how I got ahead of the market crash. But just to show you what our alerts look like, this is a recent alert that went out for Cloudflare. It's up at $190 now. Lots of very, very happy clients and members. Digital Turbine pushing $90 at the moment. We've got Square Inc. that met our target back in June, July. Zscaler, Monster winner, Freeport McMoran, recent trade alert that went out, which was the thesis was essentially on the copper index breaking out. And of course we've got Antero Resources, which I've been covering, as I said, since its breakout at $5, and I've been covering it ever since. So you know, feel free to go and check out our website. But I'm very, very unique in what I do. Plug power was like 400%, but I log every single alert that I've ever put out to our clients over the last 4 years. I wish it was the industry standard, and yeah, the purpose of that is to just show everybody that these are the types of names that I like to recommend to our clients and members, and how those charts go on to perform. But again, feel free to go and scrutinise that and see if there's any value to be had. But I think if you're someone who has a mid-term approach and you are looking weeks to months out, if maybe you don't have any consistency because you're a day trader, maybe you want to learn technical analysis, maybe you're just too busy with work, family life, business to find the best stocks and find the sectors, maybe you want to just be part of a community, we do provide it all as part of all of our memberships. I can't say any more than I guess my members do. Sean last week, I look forward to many more years as a member. Nick, I'll be a member for life. Rocco loves the community, education, guidance. Vince, trading account up over 100%, 2 years in a row. Ganesh, contracts, 25k profit. It really is a wonderful community. I think if you're intelligent and you like to have the value of clean charting and logical analysis, you'll probably get a lot of value from it. But yeah, I don't think I need to say any more at this point. I think if you found value from it and you've enjoyed this analysis, feel free to like and subscribe to my work. But thank you very much for watching, and maybe I'll welcome you soon to my platform. Thanks as always.